All right, let's get a move on then and connect with Hari Mohan Bangur. He's the chairman at Shree Cement, joining in to discuss their Q4 numbers as well as what the outlook is in terms of growth potential. Mr. Bangur, thank you so much for taking time out. It's been a pretty steady quarter for Shree Cement, and that's largely been led by the lower costs in the industry, leading EBITDA per ton. As we're heading into FY25, will the focus continue to remain on cost optimization?
Yes, cost optimization and better utilization. Right now, it is around 77%, and utilization levels should go up. Demand should be good. That is what is our expectation.
I look at the cement sector and I look at the average pricing, the average ballpark pricing. It's flat from 3 to 4 years. We've seen the real estate sector going through a boom time. We've seen the entire office infrastructure going through a boom time. There is a boom in roads, but steel prices have gone up. But cement as a commodity has not seen pricing power coming back. Why is that?
Cement capacity has been added, and we are having average utilization of the industry is around 75% only. Compared to last year, the prices are little down, but the profitability is up because the energy cost internationally has come down, and on an average, price increase will be there, little bit less than inflation. So if it is 2 years or 3 years with low price rise, next year it is expected to be little more. But overall, CAGR of 5% price rise, 4 to 5% price rise is there, and this is the trend for last so many years. This will continue. I don't think that we can expect on a yearly basis big price rise. Sporadic price rise in some markets because of supply constraints will be there. But overall, India level basis, 4 to 5% price rise is the norm.
If one looks at the capacity utilization, since you just mentioned the number of 75%, now 75% means that there is going to be more of supply and less of demand. If that is the situation, then why are cement companies expanding? Every cement company, including Shree Cement, Ultratech, the Adani Group, they all have big capex and expansion plans.
Because 75%, we say of the yearly capacity. In a commodity, every day 100% capacity utilization is not there. About 80% is the maximum utilization which can be thought of. So 75% is not a bad capacity utilization. During the peak summer months or peak winter months, when the working hours are less, sometimes in one area, sometimes in other area, then capacity utilization will not be there. So 75% or 80% is a fairly good number. After that, in the peak season, shortage will come. So in a commodity market, you can't be out of material anytime. So everybody has to have higher capacity on a yearly basis.
What is the outlook then when it comes to your guidance for EBITDA per ton for FY25, and take us through what will really drive that growth?
It is a core industry driven by the macro economics. We expect India to grow at 7% or more GDP growth. So cement demand will be 10%, 9 to 10%. Shree Cement also will be increasing its market share a little bit from here. And we expect next year 10% or more growth from Shree will be there on the volume terms. Regarding prices, as I said, it is expected that 4 to 5% will be the average price rise. And EBITDA depends on sale rate. It also depends on what is the commodity cost, especially the coal and the power. What is the transportation cost? So to predict EBITDA is little difficult. So that I will not venture into.
Mr. Bangur, given your goal of reaching that 80 MTPA capacity by 2028, which also implies a 10 to 15% CAGR, from last year up until 27, how much of it you think is going to be organic? And will incremental demand be strong enough to absorb that kind of capacity expansion at a time when there's so much competition already in the industry?
Competition will always be there. It is the first sign of developing to developed economy. India is moving from one sector to another. As we become more developed, more competition will be there. As far as we have seen in the past, so many countries, when GDP per capita goes above this threshold, suddenly cement demand, infrastructure demand comes into play. India is at that threshold, moving from developing to develop. From very soon, we expect 5 trillion economy. Cement will be the major material to achieve it. So cement demand in future is expected to be really good.
Why is that in the cement sector we've not seen massive consolidation? Like in steel, we've seen massive consolidation, but in cement there are a lot of regional players which may not be cost effective, but they're still existing. Do you think a wave of consolidation could start soon in this Indian cement sector?
Consolidation is happening, but at a very slow rate. So wave will never start. Gradually, every year, 1 or 2 units may prefer to sell. In cement industry, normally nobody loses cash money, so there is no hurry to sell out. So it may take some time, but ultimately, 8 to 10 players in India will be there.
If you have to, let's say, talk about next 3-year trend, you expect that the cement pricing and cement demand will be in and around the GDP growth. So if GDP's growth is about 7 to 8%, cement demand would be 7 to 8%, and
Yes, maybe 9 to 10%, because at this threshold, more infrastructure will be needed. So 7 to 8%, then we should grow at 9 to 10%. That is the expectation.
Bangur, great to have you on the show. Thank you so much for taking the time out and joining us today.
If you like this video, then like, share and subscribe to ET Now.